What's up, guys? Good morning, good morning. How's everyone? Are we all good? Can everyone hear me okay? Can everyone see me okay? Please do let me know in the chat. What's up, Hassan? How are you, dude? Hope you're well. Hope you're having a lovely Saturday morning. Good. Okay, so let's crack on. No time like the present. Let's get into it all. Going to be a fairly substantial session today because I'm going to be scanning the full watch list. So you can see my process, my insight. Going to be a fairly chilled session. We'll take it slow. We'll run through all of the markets. About 170, 175 markets. We'll run through various altcoins. Basically, my watch list production method is basically by virtue of taking the top 3 pages of CoinGecko and then working out which one of those trades on Bybit. I've got a bot that works that out. I basically produce that watch list at the start of every week, but it's relatively unchanged, and you'll probably recognize most of the names in the watch list, right? Because they are by nature of that the biggest of the largest 170 alts anyway by market cap. Just to touch on BTC and ETH quickly before we get stuck into all of that. Range bound, right? Nothing to discuss really here. Just purely range bound in this area. Price consistently capped by this 4-hour origin supply zone here. You can see the first taps into the zone here. Second taps, as we revisited, capped again. And now we are back down, challenging the range low sort of area. Put a tweet out a couple of days ago about this range in here. If we go back to, say, the 12-hour, this range in here, and how basically it was just sweeps of sweeps of sweeps of sweeps. You can see swept this low here, right? Everyone thought we were going higher, came down, right? Took it out again. So swept this low here, took it out again. Then we start moving up. Everyone thinks we're going higher. Everyone thinks we're going to 100k plus. And then it happens again. So just this constant sweep over sweep over sweep situation before price found some solid ground and then started moving to the upside. And basically my point was that we could see the same again, just on slightly lower time frames. Not ruling it out by any means. I do expect price to just continue ranging and bracketing for some time. And we could see this level taken out here, which is now a new, fresh, isolated low around the 100k area. But like I said also in my tweet, I'm not here to rub the crystal ball. All I'm saying is that I am open to any scenario, and that could be one of the scenarios whereby in the past it wouldn't have been in my playbook, right? Because typically Bitcoin has traded very cleanly, especially on the higher time frames over the last few years. And what we would have seen is just a simple impulse, range, take out the low, and then continuation to the upside. Last year's price action that I just demonstrated shows us that anything is possible, right? So we need to keep all options on the table, keep our wits about us, and not marry our bias too much. Okay, so that's BTC. I'll quickly take a look at ETH. ETH is the only position I'm in at the moment. Was in a few long positions, cut most of them yesterday at break even. There's no point running through them. Most of them hardly budged from entry. But yeah, basically just running this ETH position. I believe it was the last stream we were running through this scenario here with the quadruple highs, consistent loss on the momentum on the awesome oscillator. Yeah, simple stuff. Basically just looking for a tap down to take out these this isolated low here. I believe I've got some partial limits at this level 2324, and then we'll probably manually do the rest, right? So if we sweep this violently, nice green pin bar, some lower time frame divergences, I'm out. If we hold underneath and close below, then I'll keep the remainder of the position running. Okay. Morning, Mary. What's up, Jojo? Can you check SCI 2-hour div into H4 supply? Yeah, ask me towards the end, dude. And we can do any chart requests. But for now, I want to get into the scan. Okay, so I think the daily is probably a good place to operate from. I'll keep the oscillators up for now, may remove them shortly. Essentially what we want to be doing is just resetting all levels. Okay, so I haven't done this in some time, but the way that I see this, I've said this before over previous streams, it's just setting traps, essentially. Okay, so you set your sweep levels mainly, sometimes supply or demand levels, rarely support and resistance. I don't tend to use support and resistance in that manner. But then just basically looking to set alerts in these areas and see if we get any of these moves such as this. Reason being is because I had a quick flick through yesterday, had a bit of spare time, and could see that there were quite a few of these squeezes that were taking place. If so, it makes for nice trading opportunities. Simple setups can occur. You just take simple trades like this, looking for speed as we take out those levels, or divergences as always, keeping things very simple, but hoping to capitalize on the market in every which direction. So I think what we'll do first is we'll manually scan the full list. Then also I have a weekly strength list here, which spans about 15 different markets. And I'm basically, as you guys know, if you've been watching the last streams, I've been focusing on the long side on these coins here. But I did also say that if BTC locks in its monthly divergence, which we're 9 days away from doing so now, I'm not saying it will occur, it may occur, i.e. all we have to do is close this candle red. So if we closed where we are at current, then it would lock in that monthly divergence, okay? Because we have price making higher highs, right? Price making higher highs in here, like so. Oscillators both making lower highs, okay? So if we lock in this red candle here, then as I said, as per my plan, I will be heavily offloading spot most likely, and looking to position into the short side a bit more than I am at current, okay? But my thought process of late has been, especially with the recent decoupling between BTC and alts, that I should really be changing the way that I approach and think about trading the crypto markets. What I mean by that is because BTC is in an uptrend, right? A higher time frame uptrend, I have been focusing on a well-curated list of the strongest altcoins, using the philosophy that the strongest markets continue to rally, but in that nature, the weakest markets are where you should be focusing on in the short side as well. And considering there is just such a non-linear relationship between BTC and altcoins these days, I think it makes sense, and it's probably prudent to create a weekly weakness watch list as well. So Maybe I'll do it as we scan, or I may do it separately at the end of the session, or perhaps leave it for the next live stream. But for now, let's just go through the full list here for any questions as I go through. Yeah, let's tuck in. So when doing so, basically looking for two types of triggers, right? Triggers to the upside, triggers to the downside. So like I said, we could see this, right? Take out the level, price just spikes up and takes out any of the stop losses in this area. A fast, inefficient move that then creates a nice void inefficiency in price for price to run back through down to the lows and further. Or we could be looking for continuation plays such as this, right? So we're looking for breakdown plays. So it's exactly the same as breakout plays. We're looking for the breakdowns, okay? So we're looking for points with nice touch points, nice interactions. We're looking for consolidation prior to the break, okay? So we don't want anything, doing this and then coming down here. We're not looking to take short positions like this. Not how we play these moves. We are looking for resets on the RSI. We're looking for consolidation. We're looking for price to cool off in these areas, right? So that when they do this move, the RSI isn't heavily overextended to the downside, and therefore could give some relief. And basically price is cooled off to a degree where a fresh move can occur. In this case, locking it into the downside, playing that breakdown. I hope that makes sense. How's everyone been though? Anyone been trading much or largely sitting on hands? So I'll just flag any potential breakdown setups as well. Create a watch list strictly for them. Market's very choppy. Yeah, damn right. I've been preaching to members of the group that yeah, this is very much a time to hone in on the discipline side of things, hone in on the stringency side of things, and you're still making huge progress if you do so, right? It's that classic psychological reframing that we have to go through, whereby we only see a win as a win, right? If we make money, because that's really what triggers that dopamine release in our minds. But discipline is everything. It's where it's at, right? If you can go a month, 2 months without taking a trade, but still be in the game, still hawking the markets, right? Just patiently waiting, stalking the markets. That's a huge win in my books, right? So it's a massive transformation from where most of you are probably at, right? And that patience is ultimately what's going to make you a winner over the years, right? You're skipping out on bad trading conditions, bad trading environments, and focusing on prime territory only. A few smaller trades in and out. Yeah, me too. When I speak to you guys, I'm speaking to myself as well here, right? It's it's been something that I've been trying to, and I have been abstaining from trading, largely speaking, but I'm trying to do so more and more unless there's a really prime setup that presents itself. And I put a community post out the other day that said, well, it's actually my last video as well, saying, you know, instead of taking 5 trades with 1x risk, take the 1 trade with 5x risk. And in that nature, or, you know, there's another post I put out about, you know, if you could only take 1 trade a month, literally just 1 trade, that's a strict rule. How do you think it would affect your performance? And again, if you can start operating like this, then yeah, I'm sure your P&L will thank you. So Cosmos at an interesting level here. Right. Ultimately, you know, the meat of the move has happened on all of these alts, but that doesn't mean we can't still play it. Okay, that does not mean we can't still play it at all. So for instance, in here, and we mark these levels with what makes best sense. Okay, so we're literally just looking for the most touch points, ideally bodies, but a couple of wicks is acceptable as well. Okay, so body, wick, body here. If we use something like this, another touch point with the bodies would be great. Maybe come back up, if not consolidate around here, still great. Okay, look to play into the downside break here. And the trigger is literally just a candle close. Okay, so we're literally just looking for daily closes here. That goes in the red list. 1 trade a month would provide a better lifestyle. That's also very much it as well. Very, very much it as well, right? You know, as I grow older into this game as well, the more and more I want to lean into position trading, the more and more I have less of an appetite to delve down to the lower time frames. I simply don't care. I want to stave off dopamine as well, dopamine addiction. I want to enjoy my life. I want to have focus on lifestyle over wealth as much as possible as well. And although trading and money is important to me, I don't want to be a robot that's glued to the screen. And some nice stacked highs here. Right. So when we're looking at takeout plays, sweep plays, if we have multiple highs that are untapped, that are stacked, right? So let's say we had another one here. We recently had this on BTC, but you know, this sort of stuff here makes for very, very attractive targets for price to wipe out. Okay. Reason being is because it means that there are multiple, well, hypothetically, multiple stops that build up in these areas. So it's similar to equal highs, equal lows, right? Stacked highs, stacked lows, also very nice. Okay. Obviously, we want that final high or final low to be taken out to action a trade. So if it takes out the first but not the rest, that's no bueno. But yeah, they do make for much more appetizing entry points. There you go. That's an example of these squeezes, right? These spikes up I was talking about. So in this case, it would have just been setting an alert here. Okay. And it's a simple candle close in this case. Some of these markets are slightly harder to draw levels on. For instance, this level's already been taken. So I'd go for fresh. It would be a sweep of a sweep in this case. Now I could mark a breakout level, breakdown level here, but there's only 2 touch points really. Okay, we've got this one here. and this here, right? So, you know, if we had another one in this area here, it would validate the level a bit more, but 2 touch points is not enough to sort of form a trade thesis on. Interesting price action on BCH here. Very interesting. Could you enter on a 4-hour candle close? In what regard? As in with these daily levels that we're marking out? Yes, if when you scope down to the 4-hour, that level is still respected. I'll try and illustrate what I mean here. Okay, so we have a daily level, right? Hypothetically, let's say we have 3 touch points here. Right, so this is our daily potential breakdown level. Okay, well, let's say it's like this, right? So 3 proper, equally spaced out touch points. Now, let's say this one's a wick, or this one's a body, this one's a wick, this one's a body. Okay, something like that. Now, if you then scroll down to the 4-hour, obviously this would be much more expanded and stretched out. If you scroll down to the 4-hour and it's still like that, right? So you've still got the bodies and the wicks in the same areas, then that's fine. But let's say this one here, which was a wick in our previous example, looking at the daily, let's say that because it was a wick, it actually has closes that go down here, then this is not a 4-hour level anymore, okay? Because it's been broken through. So it has to make sense on the time frame that you're operating it on, which oftentimes can be the case. You know, if I'm looking at hourly breakout levels, sometimes I scope down to the 30-minute and see that it's well respected on the 30-minute as well. In which case, happy days. That's always a good sign. I love to see it, because it just means you can get a tighter entry, right? With still being within your gatekeeping, your rule book, your system, whatever you want to call it. You're not bending the rules per se by drifting down to the lower time frames too much. You're still well within your parameters and you're trading responsibly. You're able to snipe a slightly tighter entry. Okay, you don't have to wait. So BCH looking very, very interesting here. Okay. So wick to wick, you can see that we tapped into origin supply here. We've also taken out this level here, right, which is the final independent high in this area. And yeah, looks particularly attractive on the short side because we have nice confluence, good area to be doing business in. We drift down to the lower time frames now and see if we had any technical triggers. 8-hour, okay, right, not bad. We do kind of have a double divergence here, although would prefer if these peaks were slightly overextended up here. As you can see, it's sort of flat topped, right, equal peaks, with the awesome oscillator doing what it's doing. Not too bad. Okay, so now it comes down to, we're into the sort of 6-hour, 4-hour reset area here, hovering around mid. You really want to see this area lost for continuation to the downside, lose this sort of level here, and then it's game over. Also goes without saying, we would prefer to operate at the absolute high, the final high. Yeah, okay. This is a much more attractive place to be doing business than within this area here, despite the origin supply. I'll still put it on the watch list. bearer, living up to its name. So coins like BNB, they're in my weekly strength watch list. I have no intention whatsoever to be looking at shorting anything within that watch list, okay? Which is hence why I said I'd make a weekly weakness watch list, or, you know, look for setting these sort of traps and looking for those spikes, or, you know, good technical breakdowns to play into. But I won't be longing anything within the weekly weakness watch list or shorting anything in the weekly strength watch list. Okay, just doesn't make sense, right? Just try and abstain from doing that as much as possible. I do see it quite often in new traders where they go, okay, cool. Well, I've heard the sort of trading aphorism that we should be longing strength and shorting weakness. They sort of get their head around that. And then what happens is they start stalking a market like BNB for a long, and then they see a potential short setup within that watch list and try and take it. Essentially what they're doing is they're trying to just swimming against the current, right? You're stacking. When you're trading, what you should be doing is always trying to stack the probabilities in your favor as much as possible, okay? What we're doing as traders is playing a game of probabilities, right? And by shorting the stronger markets or attempting to short the stronger markets, you're essentially willingly stepping in front of a train and shooting yourself in the foot. So just a common trap I see, and something that you should all try and abstain from. Man, you would have no idea. You would have no idea where BTC is just looking at these markets. Just completely dead. That's even, you know, looking at something like Bonk, which had a lot of mind share in the meme space. It's unique territory for sure. But again, you can see one of those spikes up, nice and clean. We'll settle that up here. And, you know, just having these alerts, like, I'm not saying this is going to hit by any means, but it's like, why not have it there? You know, it's like, why not put your house up on the market for 5 times the price you want it for? Why not? Just in case someone nibbles. It's like, it's not going to hurt you. It just doesn't make sense not to do it. And you may get lucky with, you know, 170 plus markets. You could just get that alert that goes off, right? And basically it's operating completely independently from the rest of the market, okay? That's what you want to see. It's not when everything starts rallying upwards, right? If that were to be the case, everything starts rallying in unison and you get loads of alerts that go off. You're looking for that one alert to go off as that market independently spikes up. Because essentially what's happening there is it's acting out of its lane, okay? It needs to be slammed back down, it needs to be put in its place, and more often than not, that's what will happen. Seeing if we can work with anything here. Sometimes I use magnets, sometimes not. Sometimes it's better to just sort of feel it out. So in this case, see, it doesn't really align. I hope that sort of answers your question a bit more about dialing down to the 4-hour as well, JJ. And also, in terms of just sniping down to lower time frames, by all means, right? We're operating off daily levels. But you know, we could be honing down to the 1 hour when this alert goes off, okay? And we could see this occurring up here. Right, so price diverging against the oscillators. Let's say we have a sharp move as well that leads into that divergence. And in that case, although generally speaking, you want to keep slightly wider stops when playing divergences because the div can keep divving, we could do something like this, okay? Maybe take it down here. And then if you go back to the daily time frame, it doesn't look like the worst trade setup. Okay, you're not placing your stop up here and looking for, you know, a sub 2R play. You're going down to the lower time frames to capitalize on opportunity as best you can and squeeze out as much value as you can from the markets, but using that higher time frame trigger and that higher time frame rationale to do so. I'm just going to set this up here because I also don't like setting alerts at these sort of wicks, because I found that these rarely get swept, and that might be because playing into the sort of stop loss theory that few traders use this to place their stops out, sort of thing. But who knows? It doesn't really matter, right? The theory of the why is something that, if you know, if I could advise you guys where to best allocate your efforts, it would be not focusing on the why, it would be the what and the how, and just trying to work out how to play the markets as best as possible. Basically, you're looking for repeatable patterns. You're not looking to become a philosopher of the markets. So again, would love this high, but I'm going to set it down here. I don't do this sort of thing and set another alert up here. There's no point in doing that. Yeah, just the first one that it could tag basically is what I'm looking for. If you get a moment, can you please briefly explain the concept of the RSI reset and how once the 50 level is hit, it voids divergence and you need it to set up again? Is that correct, by the way? No worries, Libellus. It is indeed completely correct. That theory is correct. Okay, so let's say, right, let's say we have again, the example I just gave, okay? You've got a high here, right, that's getting taken out. Price makes a higher high, okay? So that's the high, the first high. That's the higher high here, okay? So let's say as price is doing this, okay, we get this occurring here, okay? Bear with me as I try and line up these levels as best I can. So this is a great valid divergence, okay? Because what we've got here, we've got the initial high. The difference is we've got the lower high here, okay? So this is basic divergence 101. Price making, well, bearish divergence 101 in this case. Price makes a high, higher high. The oscillators, the RSI namely, make the high and then a lower high. So you have this diverging momentum, right? Which basically shows momentum loss, right, against price. So the ultimate reversal indicator is what I normally refer to it as, okay? And I stick by that statement. Now, this is textbook, this is great, this is clean, very actionable stuff, okay? Reason being is because both peaks are well overextended here. We've got that clear divergence. We don't have a flat top divergence, right, where we're just about doing it. But part of why this is textbook is because the low of the arc, right, dips down just to this point here at the 65s, okay? Great. This even better, okay? So if it dips down to the 70, even better. But if this this midpoint of the arc comes down to the 55 region or lower. Okay, so here or lower, within this area, basically 55 to 45 on the flip side, if we're talking about reverse side divergences. This is invalidated, basically, right? So it doesn't have to be exactly to the 50 level. It could be to the 55 because we're playing a bear div. If a bull div, then the 45. Essentially, in my books, this is what I found is a technical reset, okay, whereby it completely invalidates the divergence, and you should just move on and look for one that, as we said before, is well structured, such as up here. Hope that makes sense. No problem. No problem. Hideous market, this one. Horrible to look at. Potential level here. Okay. We've got a few interesting things going on here. First off, this is a nice level to work with on the daily. Why? Multiple touch points. Okay. So we've got, I wouldn't really count this to be honest, but even here, 1, 2, 3, 4, 5, 6, and then approaching the 7th here. Now we do also have this daily divergence in play. Okay, so I want to see this go away before I think about taking a short position. If this is still in play, it goes against my my breakout system, which is one of the rules of taking a breakout or breakdown. It's exactly the same thing. So there can't be an obvious divergence in the way of the trade. Okay, so if there's an obvious divergence counter to the trade, I simply can't take it. So in this case, we're looking at a breakdown, obviously, but if we were to flip it, right, you can still see that divergence present here. So if we were looking at the breakout play, I don't want to see any divergences in the way. Okay, it's exactly the same thing, just invert it. Flag this. How many spikes into the overextended area can you have to still be a valid divergence? I don't really have too many rules on that per se. For instance, if you look at BTC in what we did recently, sorry, Ethereum rather. There's tons of spikes going on here. Okay, we have 1, 2, 3, 4 here. Okay, so in this case, this, I mean, you can't draw a line, right? Can't draw a line to match up all the highs. It's more of this sort of this arced structure as price just gradually loses momentum. Right? It's just continuing teetering off of momentum, and this is still very valid. It's a running divergence in my book. Okay, so as long as you're seeing that consistent momentum loss and we're not coming down to reset, then it's all good. So when setting alerts as well, this is an interesting spot here on Doge. You can see we've got this high here and then we've got this high here, right? I'm not going to put my alert at this high here because there's very little relative distance between these two levels. So I'd rather go for the absolute final high. And what that could mean is that price does this and we miss the trade. But it also could mean that we enter off the back of this and then it goes up to take out this final high, and we're either stopped out or we've been left in an awkward position for our trade, which is not somewhere we want to end up. Again, goes back to the notes of stringency, discipline, etc., etc. Okay, so do we have something here? What do we think? It's a shame about this deviation here. I also don't want, I never do stuff like this, okay? So the zone can't be too wide, otherwise that's an invalidated support resistance level. Again, I don't really use fixed rules in terms of how wide that can go in terms of a percentage basis. It's more eyeballing and just doing it by best sense, common sense. Okay, so we do have more touch points here. So we scroll over to the there's a lot of confluence here. Okay, all the way, right, all the way back. Now, a useful tool that I use in this area, let me just save my current one as default, so I can put it up here. Yeah, so just at a glance, this also helps when playing these sort of higher time frame breakdowns as well. Like for instance, this here. Okay, so if we look at the H12, you can see that it's maxed out here. Again, not really something that we want to be seeing, which is why we want to be seeing price really sort of just cool off as much as possible, okay? Because it resets these statistics and makes it much more favorable. When thinking about positioning, you're not shorting into an overextension, essentially, okay? Yeah, you don't have to use this. You can find this indicator, but if not, you can just do it by eye as well. You just sort of scan through all of these and just look for anything that's in the overextension. 12, 8, 10, 6, 4 as well. Okay, etc., etc. Something you kind of want to be keeping away from. And again, you're probably listening to all of these rules going, okay, shit, well, this is going to filter out a ton of trade setups. And yes, it will. Okay, it will indeed do that. Again, it goes back to the notion of even if you just take that one trade a month, right? If it's that creme de la creme setup, then all good. Okay, be selective, be stringent. Loads of lines going on here. Yeah, probably take this high here. Would like to take this again. There's just too short a distance between these two highs, so I prefer to be stringent. Go for the absolute final high and see if it hits. Here, I'm happy to do this. And we could be using the 4 hour to do this scan, right? This would crop up on the 4 hour. It would look even more appetizing, okay? Because it is more independent. But I'd like to use a daily because then I can look for those high time frame breakdown levels as well in terms of the downside plays. overall been very happy with trading performance this year though. It's been a great year. Been largely hands off. Just short bursts of good performance. And considering the current conditions and considering my bias has been all over the shop, right? It's been very challenging for me as well. In terms of my overall overarching bias of the market, in that BTC has just done its own thing against altcoins, which is a massive shame as well, because I feel like I'm now at a stage of my trading whereby, you know, if everything was hyperdirectional and completely aligned, I could just go on an absolute tear for a year. But it hasn't been the case, right? The market always poses new challenges, and you have to adapt to everything that it's doing, basically. But yeah, if you've struggled with the sort of directional bias side of things, you are not alone, my friend. Everyone that I know, every level of experience has as well. So please do check SEI. I closed it, but it was in 4-hour order block with a 2-hour divergence. All right, you insist. What do you want to know, Hassan? There is a good 2-hour divergence on the RSI here, no agreement on the awesome oscillator, and into nothing much here, right, in terms of price action. So I don't really know what you want me to analyze, to be honest. As you probably know, I don't advise people in the moment, okay? So as to whether you should have closed the trade or not should have closed the trade or should hop back in, I'm not going to start being prescriptive in that manner. It's not what I do. Okay, I'm here to show you an insight into my process, my trading process, my scanning process, so you can be independent and operate for yourselves in the market, but not to be prescriptive. I'm also not really, even though this is quite nice here, right? It's quite a nice level to work with. Not really too keen on shorting into negative price discovery, right? I'd rather there be more price action here and inefficiency we can run through. Because shorting all-time lows, that's a step too far for me. In this case, it's a spike up or nothing really. Again, we're into that sort of all-time low region here. So just looking for spikes. Some stacked highs here on the lower time frames. Actually, I can use this existing level here for header. Okay. And if you just zoom out, okay, looking at the higher time frames here, if you've struggled this year, just understand that you've been operating just within this. Okay, it's very difficult, right? Very, very choppy, non-directional markets. Yeah, give yourself a pat on the back. I see a lot of traders really sort of dragging themselves through the coals, which, believe me, I know all about that, right, over the years. That negative voice in our head just running loose, but we have to also be pragmatic and understand that, you know, the trading conditions of late, the directional bias, which really messes people up in ways that even they may not understand consciously. It's been tricky, been very tricky. So although happy with my performance, I'm mainly happy with my performance based off the fact of how hard the conditions have been. If you're listening to people on social media that say that it's been a breeze, then just unfollow that person, because it's a massive red flag. They haven't actually been trading, right? In these crabby markets, it's tough. Nothing even really to set here. I don't even know what this is, but that's not part of it. You can take this high here, that's fine. I'd be curious to know, for those that are watching, how long have you guys been trading for? We're talking months, years? If so, also just crypto or traditional as well? Always curious to hear the experience level of my viewers. So here, to be honest, I'm just gonna go for this. Just see, right? Very unlikely, of course, but there's just too many levels that are close to each other here. So I prefer to go for the final high. Let's just see if there are any potential breakdown levels. No, not really. Under a year, crypto only. Fair enough, man. Baptism of fire, dude. Hang in there. Hang in there. Nearly 3 years, mainly Forex. Interesting. What made you come over to crypto out of interest? Or are you just exploring your options? Kai's been an interesting market, right? I've been seeing this just move while the rest of the market bleeds recently. But as you can see, we're now putting in a pretty solid diverging structure on the RSI, not on the awesome oscillator. See if we go down to the 12. See, now it's tricky here because we're just on the edge of that reset, we were talking about earlier. Okay, so unfortunately, no trigger here. We'll probably play, but even still, we have to adhere to our rules, okay? Stay stringent. Ultimately, that's how we win over long scale. You see I've got an alert here at the low as well. Trying to hone my divergence game, to be honest. That's good. Divs are life in this game. They are just incredible, honestly. The amount of people that are sleeping on divergences and not using them in their systems is baffling to me. Mary, 4 years learning but actively trading 2. Wow, that's impressive. Holding off from trading for that long. Well done. Only crypto, yeah. Same. I mean, I've been dipping my toes into traditional recently, but just simply paper trading, right? Just starting a fresh journal, looking at just some of the top names in commodities, indices, and forex, and yeah, just seeing how I perform, just out of interest over the course of this year. I said to some members of my group, you know, even being this many years in the game, the importance of still approaching anything new with that approach. Okay, so it's like, you know, if you're trying a new indicator, a new style, you're using order flow in your trading, whatever it is, right? If it's new and novel to you, new markets, etc., etc., you have to go through a testing phase. Okay, you have to go through a testing phase. You can't just jump over to a new thing, start applying capital to it straight away. That's a rule that if you guys don't have that embedded into your system, or just approach to trading rather, please heed those words, because they will save you a lot of pain, a lot of money in the long run. I don't know if I'm going to be able to do this in a single stream. I mean, hardly a third through. Yeah, I'll take the side here. Range highs. 4 years, but always liquidated. I'm sorry to hear. If that's the case, Jervin, then it's probably a good idea to just revert back to paper trading. Okay, like why lose the money? Why lose the money in the meantime before you become at a stage where you consider yourself profitable or worth applying capital? Then just put capital back on the line when you when your stats tell you that you should be doing so, right? After multiple wins consecutively. Realistically, probably not what you want to hear at this point after being in the game for 4 years, but it is what it is, man, right? That's, you know, it's incontrovertibly probably the best thing that you should be doing right now. Or if not paper trading, if you simply can't do it, because I know some people can't paper trade, they just stop scanning and they just stop taking the positions. Whatever it is, if that's born out of, I don't know, laziness or just lack of caring, then you can still trade, but just trade with, what I often say is trade with what you'd spend on a cinema ticket, right? So $20, whatever it is, $15 per trade, just so you're still staying in the game in a way. And then in terms of, it's very important when you start trading like that, that you still adhere to all the proper trading principles, such as taking partial take profits when necessary, etc. And I said this to a member of my group the other day. It becomes very hard when you're trading with low size to start doing stuff like that, right? If you're just realizing $5 at a time or $3 or whatever it is, you're like, well, what's the fucking point? But start thinking in percentages as opposed to dollars and just scale that out. Okay, so just scale that out over years and just constantly think in percentages, right? So if you're taking profit, you're not taking $3 off the table, you're taking 10%, okay, or whatever it is. And you know, one day that'll be you're taking $3,000 off the table, but again, it's still 10%. Okay, so if you, it helps in both ways to think about percentages, right? It helps when you're small, and it helps when you're big. Because when you're small, you're still doing it because you're being systematic and you're just taking percentages off. And when you're big, you know, it's not as scary because again, it's just the same game. You're just operating in percentages. Trading fish and chip money still keeps you honest. Yeah, exactly. Yeah, we can move on to the mushy peas later. But it's, you know, it's all these cliche aphorisms in the market, right? So focus on the process, not the profits, etc., etc. Ultimately, that's the way, right? The best traders become the best traders just out of love of the sport, right? That all they want to do is just get better, just refine their edge. They just want to perform better, like an athlete wants to perform better. It's exactly the same thing. You know, the athlete doesn't want to perform better. Well, some do for the salary, but the best don't, right? They do it out of love for the sport. It's the same thing with trading, right? Just focus on just being better, right? And just focus on the process, not the profits. The profits come later. As cliche as it is, it's the truth. Take this here on Ondo. I'll ask you guys another question as well. How many trades a month do you take? Are you scalpers, intraday traders, swing traders, position traders? Would be interested to know that as well. Anything here? No, down at all-time lows as well. Yeah, super interesting market here. Right, weekly divergence. Locking in a day. This is mirrored to gold, right? And I realized I scanned gold the other day. Let's see if I can put it up. And that sweep hadn't occurred. Right, so that sweep isn't actually present here. Still got the weekly div, but the div plus the sweep was very, very appetizing, right? For stepping in front of such a strong market. You kind of want that double confluence. Here it looks very, very tasty. But yeah, when you're using a sort of mirrored market like this, that's not something that I'm really used to. So again, it's not my remit. I'll probably abstain. Any suggestion what to do, men? What do you mean by that, German? Scalping, but getting burnt out. Yeah, man, it's a fucking tough game, JJ. Honestly, it really is a tough game. It's not something that I've spent too much time on over the years, primarily because it's not the desired end goal. That's not where I want to be, right? As I said before, I want to be hitting a button once every few weeks and then coming back and closing it again in a few weeks' time, sort of thing. That's really where I want to be with my life. You know, raising a family, living in the countryside, leaning into the natural life. I've got many hobbies. I'm a very creative person as well, right? Food, art, music, etc., etc. All of those things I want to spend more time on. I don't want to be glued to the screen. But personal sort of preference aside, it is just very difficult to do. And, you know, the only successful scalpers or higher time frame traders I know have been raised in firms, right? They've been taught how to scalp the depth of market, you know, high level order flow, very specialized stuff. And there are a few people that trade price action on the lower time frames as well, but it does tend to be more rare. It's a hard craft. Take this very nice isolated high here. Average about 3 or 4 trades a week in Forex, in and out within a few hours, pretty much always. Okay, interesting. How have you performed, Novellas? I'll actually just shift this down here. Hull, is that the pneumatic? Jervin, may I ask what's your strategy? Yeah, of course. I mean, I'm very transparent. Always strive to be voracious with my strategy and trading. I'm going to summarize it. I mean, basically looking for interactions with sweep levels or supply and demand. Right, so in terms of left side price action, where price moves into, I'm looking for supply demand or sweep levels, aka swing failure patterns, to be taken out. Then, as and when that occurs, I'm looking for divergences into those levels or zones, speed into those levels or zones, ideally both. And then if we're talking about BTC and ETH, Delta, right? So I've got these live Delta templates as well, which are aggregated, right? So you know, anyone that's seen any of my streams will know that I use these aggregated Delta templates. Basically takes the Delta information from 13 markets, ETH I believe is 20 or something, and then looking for absorption, right, where market selling occurs into limit bids that reverse price. And I also use aggregated liquidations down here as well. So yeah, just looking for a multitude of confluence factors to occur, essentially, when taking trades, and largely looking to align with the trend as well. Time frame wise, the hourly is my primary. I dive down to the 30-minute in strong conditions, 15-minute in very strong conditions, but try and lean into the higher time frames as much as possible because they have higher validity. And yeah, that's probably it in a paragraph, dude. But you can scroll through my YouTube and there's a full trading course, and I basically try and put my system out there as transparently as possible, no secrets left on the table. And I've tried to do that since the beginning of the channel, basically. I don't see any value in sort of gatekeeping my system and just like holding it to myself. It's served me very well, and it would bring me joy if it serves others well as well, right? I don't understand that sort of mentality of being private and greedy with your system. If I can spread that out to the world, then why not? Or even if you can take some of my system and then, you know, tweak it, make it better even. I say that to members of my Discord often. If you're able to improve on my system, I generally get a kick out of seeing that, right? You may help me in that regard as well. Yeah, that's my 2 cents. My performance is middle of the road. However, most of my losers are due to poor judgment. Need to level up my psychology and not get drawn into poor silly setups. Yeah. Have you checked my recent trading psychology video I did about 2-3 weeks ago? It's half an hour of gold that you can dive into, in my opinion, in my humble opinion anyway. I really tried to make it a masterclass. Everything that I can think of in terms of trading psychology, which is a hugely underlooked aspect of trading. It's quite remarkable how like underdocumented it is when you try and hone in on trading education. How all of it's about price action or some sort of data format, order flow, whatever it is, and nothing really focuses on psychology. It's just mental, considering how much of trading is psychology, and being a successful trader is psychology based. It's quite remarkable, that dichotomy. Using the demon finder is making a big difference. Yeah, that's a classic. It's a classic. Through journal reviews, is that how you do it? Like monthly reviews? That's another thing. So many people just journal for the sake of journaling and don't do reviews. It's like, what are you doing? Why are you even journaling? I think some people just like to feel like they're making the effort, but it's such a fallacy, right? If you're here to improve, then you've got to do the difficult stuff. Okay, you've got to do that stuff in a to-do list, which you push to the bottom of your to-do list, and you keep pushing away. Just muster up the whatever it is, the motivation. It's not something that I sort of suffer from, but I know some people do just have those things where they just keep pushing them away. It's like you need to do the hard tasks, or the uncomfortable tasks, or whatever it is that's making you shy away from that growth and development. And often with these things, it's the fear of the thing, it's the anticipation of the thing, it's not the actual thing itself, right? So you may be going, oh, I don't want to do this monthly review or this quarterly review or this weekly review or whatever it is, but then you bosh it out in half an hour and you find loads of gems that you then get excited about and go, that was a great exercise. Just about psychological reframing, right? And that's not just applicable to trading, it's to any sort of aspirational aspect in life. How long you in trades for on average? I don't really know. It very much depends on the context of the market. So hard to say. Days to weeks. That's my blanket answer. Journal all trades, also daily missed opportunities, end of week reviews. Only been doing this for a few months and need to do a full review ASAP. Yeah, get on with it. Just get on with it. Got my Notion and Edgewonk games going. Nice. That's a good combination, my friend. Thumbs up. And yeah, ONF approved. Haven't used Edgewonk in years, but it's very, very simple stuff. And then if you've got Notion alongside it as well, that's great. For me, it's Airtable. Love Airtable. Right. So I use my gatekeeping on Typeform, and then my journaling on Airtable, and then simply monthly reviews just in Word documents. Although, yeah, could do that on Airtable as well. Guys, I'm keen to see this stream out with you all, but I just need to grab a glass of water, so give me 2 minutes and I'll be back. Right, back to it. Notion was a game changer for me. There's a lot you can do with it. Yeah, same with Airtable. It's a fantastic resource and it's free as well, which is remarkable. Are you viewers that I'm speaking to here familiar with my gatekeeping process? Because that's the source, right? I speak about it extremely confidently and I'm a massive advocate of how it can completely radicalize your P&L. It's an incredibly powerful tool. It's a shame we weren't hot to this one. That's a really nice level to work with there. Not familiar with gatekeeping? No? None of you? Okay. Let me pull it across real quick. Apologies to anyone who has seen gatekeeping format before. So basically, it's a sort of flashcard process, right? So this is my trading system, okay? So this is my trading system here. I can see if I can actually. So okay, when you're developing a trading system, it's a 3-part process, okay? So let's see if I can just run you through this real quick. Okay. So firstly, mind map, okay? So create a mind map, spider diagram. This can be here in TradingView. You can just do it with a pencil and paper. Use a pencil, not a pen, because you have to rub out a lot as you go. So for me, I've got 2 trading systems, the regular pivot system. So this is what I operate on realistically 90% of the time. Hyperdirectional, so this is when you have super directional markets. So 2 trading systems for different market conditions. And then all of these criteria, okay? So all of these criteria based on, each of the systems, okay? So for instance, you've got the trend in here as well, pro trend, counter trend. Do you have extreme speed? Is it trigger on the 1 hour? Has enough damage been done? Do you have reasonable delta confluence? All of these things. You then transfer all of this into type form, okay? I'm going to do a full video on the channel probably over the next month, which will really sort of go into this process ground up, right? Everything from here to here. And then once you have it in this way, then you just click this play button in Typeform, and it brings you to this very simple flashcard system. So let's take the ETH trade, right? The ETH trade we were just looking at before. So watch this ETH, yeah. So yeah, let's take this ETH trade here, just to use a sort of live example. So yeah, basically you just go through this and you say what system are you operating. In this case, it's a regular system. Okay. So is the trade based off a sweep, supply, demand, or deviation? Only exception is a delta anomaly trade, but there has to be 1 in 100 occurrence, blah, blah, blah. So you basically work out the nuances of your system and the way that your system then operates in the market. And for me, this was yes, right? So here we are looking at a sweep here. So yeah, we're operating in the right territory. So then we proceed. If a sweep deviation play, are you operating at either the absolute final high low, or at least a high low that's independent enough from others that it could stretch for? In this case, yes, we are doing so. We're operating at this high here, which is an independent high, meaning there are no other highs up here like I was speaking about previously. Do you have a well-structured double divergence across the RSI and the AO on the 30-minute and above? Keeping in mind these exceptions here. Yes, because I'm looking at the 2-hour here. We're really looking at this running divergence across the 2-hour time frame. So that's well above the 30-minute. Is the trade pro or counter trend? Yeah, it's pro trend Ethereum, because on the higher time frames we are still pro trend here. It's using the 12-hour or 1 day to determine trend. So you can see that on the 12-hour we are still nicely pro trend. And basically just runs through just tons of what I call gates, right? The reason I call them gates is because they can either open and let you through to the next one, or they stay closed and they stop you from taking the position. You have to treat this whole process with tons of respect, right? If you don't respect this process, then there's no point using it, right? It's like there's no point journaling if you don't do the journal reviews, right? But as long as you answer this completely honestly, and that's a whole nother journey in itself, because when I started using this tool, I'd answer dishonestly because I just wanted to be in a position or whatever, right? So you have to sort of like make sure that you're not just like scratching those itches for the sake of it. But let's say in this case, I don't have reasonable delta confluence, okay? So I say no, and what happens is I get met with this, right? This gate has kept you out. I've put my own sort of image here, but you can use anything that works for you visually. And yeah, basically you either get to the end, and then at the end, so let's say I got to the end of it, it would give me my breakout sort of weight. Sorry, I'm in the regular pivot. So it would give me my weighting on a percentage basis. That I can take the trade on. So let's say this was pro trend 2-hour, Ethereum would be 9% that I'd be allocating to the position. Bear in mind, I keep very little of my total capital on exchanges, so my percentages probably look a lot higher than the standard 1 to 2% that you commonly see. But regardless, that doesn't matter. But yeah, basically, if I manage to get to the end, it then tells me what risks to apply, and everything is just systematic, mechanical, objective. It's worked out for me. There's no emotions that sort of come into my trading process anymore. It's all hyper systematic and systematized in the sense that this does the work for me now, right? I have to wait for my alerts to go off. If so, I come to this. I see if I pass my gates. If I pass my gates, I take the trade. If I don't pass my gates, then I abstain from taking a position and simply wait for the next alert to go off. If there's, I've fine tune this like fuck, but if there is a point where a gate keeps me out, but the trade then also still plays, then I document that in a Word document. If 3 or 4 of those crop up over, you know, a relative period of time, then I'll then go into the workflow and tweak this so that it then includes those findings, right? So it's constantly adapting to the market conditions as well. And it's a malleable process, right? This is not concrete or crystallized. It's a malleable process that adapts with the market over time. And honestly, it's just everything, right? It's the most useful tool as a trader that I've found or developed. And yeah, it's indispensable to me at this point because, like I say, it just takes all the emotion out of trading, which is where my pitfalls were for many years. You know, it's all the elements of, when you talk about emotions, you're then talking about psychology, right? So it's all of those things that let you down as a trader once you do rattle down your system. So yeah, keep eyes on the channel for the full form video. I'll go into this in a much more ELI 5 manner, step by step, so you can then construct your own. Appreciate it, Charlie. But after looking at that, does that seem like something which is of interest to you guys? Should I go ahead and make that video? Let me know. Take this height here, tau. Right, already a nice alert here on ton. That's a perfect height to be operated with, nothing else you can stretch for in this area here. Again, really nice breakdown level, potential breakdown level here, but it's a shame. It's a shame that the meat of the move's already over and we're going into negative price discovery there, because as I say, shorting all-time lows, probably not the best strategy. Maybe as well, right? It may be fine, but again, I'd rather be more stringent. TRX, man, this fucking market, this is just going to keep running, isn't it? Like, I'd entered here off the back of this weekly candle, exact resets. So when you're looking at resets, not in a manner of invalidating divergences, but in a manner of taking them as trade confluence, exact resets, especially on the higher time frames, very valuable. But I'm out of this position because of BTC picture and the potential monthly divergence and the monthly SFP of last close. So again, not letting emotions get in the way of my trading, simply focusing on the signs that the market gives me. And literally everything that I do in my trading approach is just chart based. Everything is chart based, right? The charts tell me everything. I don't have preconceptions about the market. I don't have thoughts about where it's going to go. I completely ignore news. Right? I don't let news form any part of my decision-making process. I simply just trade the charts, right? If I see a divergence plus a sweep, you know, pro trend, with some speed, with good delta, stars have aligned, I'm operating within my system, I flip over to my gatekeeping, I take the trade, and it's as simple as that. I've just found that method of simplification has just made everything A, more profitable, B, less stressful, and everything you need to know is in the charts already. Without sounding too voodoo about it, it is the truth. Like, often when you see those news-based dumps or whatever, they're usually off the back of speed divergences, etc., etc. I.e., the price action's already been set in stone first. Virtual's a very, very interesting market, man. I'm not gonna lie. What I said at the beginning of the stream about not shorting anything within the weekly strength watch list, this has really got that tested. Really got that tested. It's just such a nice level. Exact reset, 4 hour here. It's got a lot of the hallmark signs of a breakdown trade. I'm gonna have to potentially bend rules on this one. I'll think about it post stream. Please make that video. Okay, loud and clear, guys. Loud and clear. Where are you guys all from? Is it all Saturday morning for you guys, or are you from different areas of the world? Hope you guys have got some nice weekend plans. London, yeah. I guess by your fish and chip comment. Whereabouts in London? I was Hammersmith before I emigrated, left the country 4 years ago. Okay, what's going on there? Australia. What time is it in Aussie land, JJ? Chiswick. Yeah, nice. Nice. Used to go to the High Road Brasserie a lot. To be honest, lots of good restaurants in Chiswick. Spent a lot of time there. Getting through the watch list, guys. We are getting through the watch list. This has easily been the longest stream I've done, so thank you for joining me on it. Yeah, it's a good spot. It's a good spot. I was there when they opened it, and I don't know if you were around at that time, but they were giving out these keys, like these little keychains, and it was lifetime 50% off. I think it was booze and food, so we used to go there all the time, like take the whole family there, and just get crazy cheap food, good quality grub as well. Man, though, I can't wait until crypto just like the conditions become more opportune for trading. It just feels like it's just been so lackluster of late for a long time as well. I mean, look at this shit. What is this? Like, it's just trash. Just absolute trash. I'll take this high here because we've kind of got stacked highs here, including this one. Used to work at Sam's Brasserie. Yeah, I know as well. Good spot. People show me their keys to Iron House. How did that go down? Like, Bean. Everyone was so fucking bullish. Bean. Like, look at this fucking chart, man. Jesus Christ. Even this, like, solid divergent structure. Imagine, well, slightly overextended, as in too many bars here. But even still, very strong structures here, and just only able to just do this is just it's lackluster to say the least. Nice isolated high here on BSV. Dino market. Which one's the high? Yeah. What's up, Zash? How are you, brother? Hope you've been well. Mary, you're West Algarve. Yeah, I know. Very cool. Sagray's way. Yeah, we hardly head down that way, to be honest. So busy. Also, not a fan of getting absolutely thumped by the waves over there. The surfing is not the most enjoyable for a newbie like myself. The thing is, yeah, it's like Deep and Dog, they're actually still in my weekly strength watch list. I'm clawing for that sort of narrative of weekly strength. I mean, it's, like, how is this still within the watch list? It's just everything is just so trash. It's so weak. Fartcoin as well. This is one of the stronger markets. Right. This needs to get out. I hate that. Look at this. AIDS market. Giga. Nice high here. Again, why is it nice? Stacked highs. So it's when that second high doesn't quite take it out, right? Makes it a very nice target. Should clean this up. Too much going on. I'll take this here. Yeah, just about. Because this sort of all merges into one. I'm happy to take this high. So again, this would have made a really nice breakdown trade here. Okay, I'm just starting to see what these sort of levels look like. Ignore these. I was shooting some B-roll yesterday, playing with some position tools, not actually taking any trades. Wow. This market looked very different last time I checked it. I mean, nothing really I can set. There's no chance it's coming up there. So, not as many breakdown trades as I would have hoped, or levels that we could work with throughout this stream, which reduces the probability of this stream being particularly fruitful in a way, and because markets are much more likely to sort of break down and spike up. That being said, we have multiple traps set now, right? So we've put in some good work, multiple traps. And what is this? So yeah, we'll hope for some spikes up. Wow, big rejection off this SFP up here, SPX. Big rejection. Nice high here. Very nice. This is exactly the sort of area we want to be doing business. Also quite nice here. Simple range high. That's good. Hard to say anything here. XMR holding on for dear life against the prevailing winds of the market. Same here. Oof. Yeah, I'm actually quite fortunate. I took this trade here. Stop at the highs. 44 in the space of a week. Anyway, guys, nice to catch up. Hope you all enjoyed that mega stream. And yeah, we'll catch you all next week. I've got a special guest on, I think it's 11 o'clock next Saturday. So yeah, it'll be a slightly different stream. And look forward to seeing you all then. Have a lovely weekend. Enjoy your Saturday and Sunday. And members of my Discord, I'll catch you in the lounge. Otherwise, I'll catch the rest of you next week. Take care, guys.